might have to enter through another account. Okay, that is the reason.
It is showing that the recording
Just a
is
minute.
on.
I have to enter through
It
another
is recording,
account.
ma'am. It is recording right now.
Yes, yes. Okay. Only 31 downloads are there. Okay. We'll start in a minute. Someone is writing in the chat box. We'll start in a minute. We are just waiting for some more learners to join. Now, I think you can start presenting, sir. And take hold of the meeting. I'll be there as only as a monitoring person.
Yes, ma'am, I can start now, and you have to be there as a supervisory authority.
Please start, sir.
Yes. Good evening to you all the participants, and madam, and IGNO RC Bhopal. I think I am audible to you all.
Yes,
Yes.
sir.
Okay.
Yes, yes.
Yes, sir.
As you all know that today the counseling session is for the accounting management for the managers. Whoever may be in the present life, either in domestic or in any commercial relation, everybody needs the knowledge of accountancy. But once a students of MBA and going to become a head of any organization, then one manager is expected to have in-depth knowledge of all the financing procedures. Why financing management is required, how to implement it, what are the elements we should consider that all we will cover today and whatever is the remaining we will cover tomorrow, and we are having 4 days to cover it. So please don't hesitate to ask a question. I would suggest that to not to interpret it in the between. So you can write your query in the chat box, and I will try to clear all your chats today itself after the end of the session or in mid of the session as you prefer. So I hope that
Sir, I just want you to please give your introduction where you're doing your current job, please.
yes, I will give, madam.
Because I am not having your full introduction. That is why I have not given.
Okay,
So,
madam, I will give.
and
Myself, Dr. Singh. I have done PhD in public finance in 2019 from Bartolomé University. I am M.Ed from IGNOU Bhopal and B.Ed from Jivaji University Gwalior. I am B in Electronics and Telecommunication, DBM and Master of Management Science in Marketing from Pune University. And I have served in Indian Air Force for 23 years. And after that, I have joined income tax. And today, I am income tax officer in Bhopal since last 15 years. I continuously take the academic counseling for all the organized and unorganized sectors, institutions, organization, almost all covering most of the states. And my papers on counseling, on ethical values, social values are being published in almost all 4 to 5 countries also. So this is my hobby to conduct the counseling, to enter in the social works, and today I have got registered in IGNOU in 2020 as a counselor, but today I got this opportunity to be before you. This is my brief introduction. I think, madam, I have covered the required introduction. So before...
thank you, sir. Thank you very much.
So all the participants, you must be serious on one point, that you are going to be a future manager, and there is a two philosophy for any manager: manage by hook or crook. And what is hook and crook? Steal or borrow. What is to steal? That knowledge. Today if you can steal some knowledge from me or among from you peoples, that will be your achievements. So I am not going to read line by line from your books or publication provided by IGNOU. My aim is to focus on how to start an accountancy and how to end it to reach to a satisfaction level as a beginner's manager. So the basic things is what is accountancy, how accountancy is related with the finance, what is the importance in any organization. So I will take 5 to 10 minutes just to cover up a backgrounds of accountancy. See, accountancy is nothing but a record of, it is art of collecting the data, recording it, classifying it, summarizing. जैसे there may be different heads. Now if you take the example of any home, so you segregate the requirements of home, that what are the items required and how much I can spend over it. Until unless you plan your financial matters, I don't think you will run smoothly. You may land somewhere else. So accounting is a procedure, accounting is a method, accounting is an art to record, classify, the summarizing, the significance. So all this I will cover with the help of PPT, and PPT is not exhaustive, it is just a indicative. I will detail point by point. So allow me to go to put PPT before you. This is the accountancy for managers. This is held by IGNOU RC Bhopal for the MBA new patterns. If I go for accounting and overview, what else you are going to study or to understand the things in next 4 days, that all includes the what is the accountancy, how to prepare books of account, what are the financial statements, what are the primary financial statements, what are the final financial statements, and how to prepare the final accounts for the company. So your syllabus is mainly focused on the preparation of final accounts of the companies. Until unless you have the raw data of the accountancy, you cannot prepare any final accounts. And now, what is the raw data? How to collect it? So, I will take some examples, and with the help of example, I will try my best to convey you that what is the first step for collecting of data and reaching to the final books of accounts of any organization, including that of company. And now one topic comes the cash flow statements. So cash flow statements, as of now, may be new to you. So I will come at later on. There are two types of flow of the finance. Either it is your home or your office or your organization. That is the cash flow and the fund flow. There is a difference between these two. For a layman person, both are same. Then it will be covered maybe tomorrow, or if time permits today, that what is the cost account. Once you enter in the cost accounting, that you may feel some boring, maybe new to you, all those who are neither working in any financial organization nor having background of commerce. So don't worry, once it will come there, we will look into. And once you understand the cost accountancy, then you will feel relaxed how to go further to enter in the era of finance management in any organizations you are where you are expected to hold a very prominent post. Financial statement analysis and emerging issue in accounting. See, once we talk that this is the present era of high technology, that high technology does not mean that only having computer, social media, internet, or other softwares. That emerging issue in present era is also in the accountancy. Now we are moving from tradition to the modern. Now what is modern? Until unless we know the what was the tradition, how we can say that we are in the modern? So for that we are here to understand what is the reports, types of reports, what is the annual reports. If you focus on annual reports, then balance sheet, profit and loss account, trading account, manufacturing accounts, cash flow accounts, these all are the annual reports, which is reckoned from the 1st April of every year as a financial year. And at the end of the financial year on 31st March of next year, we prepare say annual reports. But that annual report does not mean that you are preparing in one day or based on 31st March. It is a continuing process for year together where you reach at the end of the March. Then we will comparatively, there is common size and trend of statesmen, different organization, some Indian, some foreign countries, they prepare in different way, but the principal theory remains the same for all. Human resources accounting. Now the human resources accounting, that there are three resources: man, money, and material. If you don't have the skilled manpower, then you cannot expect that organization to grow and rise in the present time of competition. So you must have good, excellent human resources. How they are accountable, that we will read in this chapter. And last topic of the entire 4-day session will be a forensic accounting, that we yesterday I briefed as a fraud. If you see, there was large office scam going on in finance abroad in India, and we read for 1 or 2 days in the paper or when comes before the court. Otherwise, we forget it what is happening to that. So, being manager, you have to watch carefully. And then how you watch? What is the modus of doing fraud? What are the methodology and techniques to control it? And how to control it? Thus, we will go in this topic. So, this is all about the brief that what we are going to learn in next 4 days. So one my request, if I am somewhere my speed is fast or my pitch is not clear, kindly do acknowledge me that I should go slow, because motto should not be to cover the complete syllabus in 1 or 2 days. Motto is to be that the basic plinth, that is the base, it should be clear, crystal clear, not keeping any ambiguous thoughts in your mind. In introduction, what we will see, that we nature and role of accounting, meaning, objective. Let us see what we will see. Now you can see that the purpose of accounting is to communicate or report the result of business or operation and its various aspects. Now we want to communicate it. Now whom we should communicate? Who are the beneficiary? Government, who is a law making body, we have to abide by the law. Business owner, manager, CMD, that what is going on in your organization, where we are lagging, where we are leading, where there is a requirement of changes. All these things, once we are going to assess, we must be knowing that what is going on. So there is a one short theory you must have come across, SWOT, that if you keep that analysis, that theory in your mind, irrespective of whether it is financial or not, you can assess the thing that what is the strength of you or your organization, what is the weakness, what is the opportunity available before you, and what is the threat. If you don't avail the opportunity once you get in your life, then it is a threat for your future. And once you are identify your weakness, you can convert into the strength. How? Just after going through such counseling sessions from any organization. So accounting is the art of recording. Recording of what? Recording of financial transaction, because accounting only is done for the monetary measurement. It is never applicable to the non-monetary measurement. You cannot write in your book that there are 5 managers, 300 rupees. No. You have to write the salary to the manager, this salary amount, this. You have to measure only monetary terms. So wherever it is not written, then you have to consider that this is only for monetary consideration. Classifying different expenditure, different income, you have to classify. That will come across through the profit and loss account, trading account, balance sheet, and cash flow statement. Summarizing in a significant manner. What is the significant manner? There are some accounting concepts. There are accounting standard, AS1, AS2, AS3, etc. Now ICDS has also come to compete with the international standard of the format. So there are different principles which will come across within these 4 days to prepare the basic documents of the accounting. In terms of money, transactions and events which are in part or at least of financial character, and interpreting the results thereof. The process of identifying, measuring, and communicating economic information to permit informed judgments and decision by the users of the information. Now, this is the point for you, that once you are sitting on the chair of finance manager of any organization, then informed judgments and decisions, you have to make a judgment based on the report produced before you by your accountant. There are different accounting personnel also, you will come across to it. They are your accountant, senior account officer, internal auditor, external auditor, controller. There are many bodies that will come across, and that based on that judgment, you take the decision. and that decision is form the base for your future growth. What is the objectives? Objectives, just we have gone through that. The objective to maintain a systematic record of business financial transactions. This is the very important point, that only to maintain a systematic record. Why? In order to find out what is the health of the business. Now we must know at this stage that you must have two best counselor, advisor, one health and one money health, that is the wealth. If you have two best advisor, then you can get rid of any chronic diseases or any shutdown in your business organization. So that is the basic motive of the accounting, that to find out the whether the business has earned profit or incurred loss. That is the most important objective of the accounting. And after knowing this, what you will do? Just read the last point. By analyzing financial data and providing interpretations in the form of report, accounting assists management in handling business operations effectively. Main goal of any organization is to continue the business and earn the profit. Once Income Tax Act was brought in 1922, it was said that take the tax like a bee, honey bee. ये हनी बी क्या करती है कि फ्लावर्स के ऊपर जाती है, पौधे का फूल का वही एक हिस्सा लेती है कि फूल को पता भी नहीं चलता और कितना वो हनी कलेक्ट कर लेती है. इसी प्रकार से in the same way, when you come across that where is the lacuna, where is the shortage, just modify it, rectify it, and move ahead effectively. The scope, you cannot limit the scope of accountancy. Every day in life, nowadays petrol rate is rising day by day. Now you are thinking that now we will only go by this, only not four-wheeler, by two-wheeler, by public transport. So everywhere there is scope of accountancy. Data creation, collection is the area which provides raw material for accounting. Raw materials starts from any financial transactions. Now you went to the shop, medical shop, you told me give me 2 aspirin. They gave you aspirin. They gave you one voucher, rupees 20. You have paid 20 rupees. From that voucher, that is the basic and first and foremost document for accountancy to reach to the final account, is that the voucher, that slip, that the cash memo, that is the estimate you have received. Accounting can be defined as a process of reporting, recording, and interpreting. The introduction of accounting helps the decision makers. Now there are some terminology. There are thousands of terminology, endless terminology in the finance sector, but whatever the terminology affects your balance sheet during this counseling session and profit and loss account, that I have segregated few points that they needs different type of treatment at different places. So it is important to just go through the point that what is the economic event, any transactions, consequences of any purchase or sale, in the economic events that must have the monetary transactions. Assets are those resources owned by organizations. It is the owned by you, means you have the ownership over it. Now what is the ownership? Now I will take the example of capital, whether capital is asset or liability, because if you see the balance sheet, then you find left side that the capital, Mr. X, that is the partner or director of the company, having 5 crore rupees. So once a partner or director have capital of 5 crore rupees, then why it should be at liability side? But that difference we have to go through, that why the liability. The asset means that you own it. And capital is not owned by the Mr. X, that is owned by the company. So that becomes the liability that will come across. These points I am hitting here. Just once I reach to the balance sheet, this point you should collect there. Owner's equity. That is the point, that what is the owner's equity? Owner's equity is the one of the three vital segments of a sole proprietorship balance sheet, and one of the main aspects of the, that is what is yours. That is your profit. That okay, what is the turnover? 5 crore. What is the profit? 3 lakhs. What is the net profit? 2 lakhs. After tax and interest, 1 lakh. That 1 lakh is the owner's equity, which goes to the individual's capital account, or he can withdraw it. That is the owner's equity for which we are running behind. Based on the above notes, you can say that assets are the liabilities plus owner's equity. If you want to elaborate it, we can elaborate it. The owner's equity means what? That the profit minus capital, tax paid, interest paid, whatever. There are many terms in the balance sheet we will come across, and we are moving towards the company's balance sheet. So I will introduce 1 or 2 points in between, which may not be common to you all so far, but once we will reach to the company's balance sheet preparation, we will look into steps. These are the steps, 7 steps and all, and 6 steps in preparation. Identifying financial transactions. Now let us focus on these 5 points, and then we will rush like anything and we'll reach to the profit and loss. Now there is a different departments in any organization: material departments, production department, HR departments, administration departments, purchase departments, quality assurance department. They all independently purchase, procure the items, make the payments through account sections. All the bills or demand voucher comes to the account section before a accountant sitting there. He enters in every individual's ledgers, prepares the checks, and reimburses to the vendor, the creditor who has provided the materials. So you have to identify that where this voucher, where this payment has to be shown in the final books of account. So accordingly, you prepare the journal of the particular unit, and accordingly prepare the ledger. So this gives rise to the journal and ledgers. Second comes the measuring the transactions. So what I said earlier, that see, these transactions are absolutely in the monetary terms. It should not be, you must have heard the name of barter system. In old days, there was a barter system in which if you have rice and you want wheat, then depending upon the production, we can say that, okay, you give me 5 kg of wheat, I will give you 2 kg of rice. In that way, items were exchanged and the requirements of all the groups were met. From time to time, now it has been converted to the finance transactions. Now, okay, the rice is 40 rupees kg, wheat is 20 rupees kg. So you give me 5 kg and 100 rupees wheat, I will give you 2.5 kg, that's 100 rupees rice. So measurement must be in monetary form only. Recording of transactions. Every transaction to be recorded then and there. Very first documents where you will record is your journal. You take the vouchers, compile in the file, in the folder for the month or for the week, whatever may be organization, and then enter into the journal. And then ledger, and from ledger prepare a trial balance, and after trial balance you reach to the final books of account. Classify the transactions. Where you classify? In journal itself. In journal itself. Now how you classify? Just I will tell you when I will go to the debit and credit formula and rule. There I will tell you that how to classify. summarize it, and then analyze and interpret the financial data. Here comes your role as a manager. Up to the summarizing that your accountant or account staff or your subordinate do it, but after it is put before you, you have to analyze. And whatever data you have interpreted, you have prepared the final books of account and need to be communicated to the all the concerns. Who are the concerns? I have told you the government, the management, the shareholders, stake shareholders, जिनका शेयर उसमें लगा हुआ है, and the customer for whom I am working, they all are to be known, they are to be communicated. Now, if you go to the previous PPT, I have told that identify the financial transactions, measure the transactions, record it, classify it, and summarize and analyze it. Now, how to identify? This is identifying and recording the transaction is known as the bookkeeping. Where bookkeeping ends, accounting starts. Accounting begins where bookkeeping ends. Means once you have prepared your journals, ledgers, trial balance, now coming to the profit and loss account, where now accounting is there. What is the balance? Now you are putting one side is 100 rupees and the side is 95 rupees. What is the difference of 5? How to get the difference of 5 and why there is differences? This starts from the accounting books. Scope is same, that it involves identifying, measuring, recording, and classifying financial transactions in the ledger accounts. So nothing to say new in this. Objective is to maintain systematic record, nothing new. System of accounting, the single entry system and double entry system. See, single entry system is only for saying purpose in home or in domestic or in small organizations, where we see that I have paid rupees 100 rupees to Mr. R and saying this to this, he has given me this. What is the resultant? You don't know, because you don't need it to know the resultant. But in commercial organization, in companies, it will not work. There is a double entry system. Now we must focus on this. What is the double entry system? Always there is a two transaction involves. You take one example, you two friends are going and one known person met to you and he knows both of you. He tells, yeah, today you are very smart, Mr. X. So it gives the two information. It communicates two information that Mr. X is smart, no doubt. So what about Mr. Y? Does he not? Or he is dull? So that he is dull, that is the second implied communication. And you are smart, that is the express communication. Here in double entry systems, once we take 5 rupees from Mr. X, it means Mr. X के अकाउंट में भी एंट्री होनी चाहिए कि मिस्टर X has given. तो गिव एंड टेक कहते हैं ना, दिस इज द पॉलिसी ऑफ गिव एंड टेक, पहले दो और फिर लो. So once you are giving and you are taking, it is termed in the accounting as the debit and the credit. Debit does not means only giving, or credit does not means only taking. Both differ, depends upon who is the giver and who is the receiver. Now there are 3 golden theory of debit and credit. And throughout your course or exam under due pressure, there is always doubt this will be debited or credited. Where to debit, where to credit. So because we forget simple one formula, debit and credit. Now this is the advantage of double bookkeeping. It is a scientific methods, because once you are to tally something, so if you are telling somewhere it is coming 105 rupees, somewhere it is coming 95, then where is the difference of 10? So you will find the multiple of 2 and 20, where which entry I have left. So it is a scientific methods. And what is the balance difference is there? That is your profit calculated in the trading and manufacturing account and the profit and loss account. Trading and manufacturing account, imbalance amount gives the gross loss or gross profit. And the same difference of profit and loss account gives you the net profit or net loss, which you carry it to the balance sheet. This is the qualities of accounting that I will come back. First, these are the person who is to be informed. Communication, whatever I told that the same should be communicated. The stake shareholders and investors, creditors, employees, government, management, and consumers and others, they all should be informed. Role, I will come back this role. First, let me. These are the persons who are involved in any organization for entire events of controlling of the accountancy. Internal auditor, a check, you check, it is an internal staff employee. Today you are in audit, tomorrow you will be on the manager chair. External auditors from the CAG, if the government or other chartered accountants, or if other company, from the consultancy. Controller, who is the chief finance officer of the organization. Money measure concepts. There is a concepts. What I told that what are the base of identifying the data. So there are concepts. Data, what should be the aim? It should be money measurement concepts. Continuity concepts. जो भी आपका खर्चे का पैटर्न है, एक्सपेंडिचर का पैटर्न है, that should not be focused on the amount, rather it should be focused in the percentage. To continue in the market, in the business, this should be our proportionate. For this purpose only, you have gone through many times the reserve and surplus. The reserve and surplus are of two types: revenue reserve and capital reserve. Revenue reserve is to meet the any eventuality of that particular year, whereas the capital reserve is accumulative nature, and it is reserved to procure the further machinery or equipments or technology in future course of time. And cost concept, you have to see the cost also. It does not mean that there is a good machine available in a USA, I should procure it. And once you go to the cost, you have to stop other functions to procure it. No, that should be the concept. For this point only, I have escaped many PPT backside. Once you go for any debit or credit, so there are three types of accounts. They are interchangeable by some narration, some notation, or change in the pattern of transaction. अब देखिए कि तीन अकाउंट्स होते हैं आपके, पर्सनल अकाउंट्स, रियल अकाउंट एंड नॉमिनल अकाउंट. तो रियल अकाउंट इज वेरी मच क्लियर that it is not related with any living or not living things. That is that tangible account and intangible. Tangible account means that all whatever the things physically available and you can touch it. If you touch something like your laptop, computer, mobile, table, chair, whatever may be, they all are tangible real accounts. That is the real asset. That is the fixed assets. And intangible real accounts are you cannot see, you cannot touch, you cannot feel, but they have equal importance in your accountancy. If you have any example in your mind, that is well and good. Otherwise, I will say the goodwill. Now, if you see that Twitter is being purchased by Zelensky, what is said that I am ready to pay whatever amount Twitter owners wants. That is the goodwill that against which he wants that account to have. Now you see that some big organization like Adani and others are purchasing other groups, concerns, taking over. Why? Because they know it has a name. that name and fame we say as a goodwill. All such things are known as the intangible real accounts. Personal accounts are having three types. नेचुरल पर्सनल अकाउंट, मिस्टर आर एन सिंह, मिस्टर एक्स, मिस्टर वाई, जो भी नाम आप देना चाहें दे सकते हैं. आर्टिफिशियल पर्सनल अकाउंट्स, मेसर्स अग्रवाल ट्रेडर्स, मेसर्स so and so private limited company, whatever may be. And representative personal accounts. Representative personal accounts, rarely you come across that there are certain provisions that somebody is sitting in Netherlands or running concerns in the India. So they have made someone head over here to look after all the affairs, and the accounts run by them is a representative personal account. It has a legal sanity, legal identity, and legal approval. Nominal account. Nominal account means the expenditure. That expenditure without any names. Let's say wage. What is this? Nominal account. Rent. What is this? Nominal account. But rent payable, rent paid to Mr. So and so. As soon as you add some qualifying words, yeah, adjective over that, it turn over to a personal account. Rent, 500 rupees. That is the nominal account. Now rent payable to Mr. So and so, or rent payable. It means once it is payable, means somebody is claimant. That becomes the personal account. You identify these three accounts. I will give you ample example now itself. That what is the personal account, what is the real account, what is the nominal account. And after identifying this, you go to the three golden rules of debit and credit. You see, this is the rule of debit, and these two pages are the base plinth of your any organization or any knowledge base, like a home construction. If you see the buildings, you see everything but not the plinth. These two pages only qualify all the transactions. Personal account, debit the receiver and credit the giver. Means those who are receiving, if you are receiving something, means your liability, raising your liability. Now suppose you have borrowed 10 rupees from Mr. X. So Mr. X is the giver. It has to be returned to him. He is a credit, on credit. Means you have taken loan from him. It is his credit is over you. Debit the receiver, that your account, those who are receiving it, unke account should be debited in the journal. And once it is debited in the journal, I will show you the example. It will be debited in the P&L, and accordingly it will be the summarized and then put up to the balance sheet. A real account, debit what comes in, credit what goes out. If you see the personal account, debit the receiver. If we change the word receiver as comes in and goes out as the giver, if you see goes out, here in personal account, it is not going out, it is coming. So first part is the same. Debit the receiver, you are receiver in both the way. In real account, your organization, Mr. X Private Limited, is a receiver, that a credit, and the from where it goes. Now you have taken, you have debited their account that 100 rupees. Now it goes as a payment or transfer to other company or other concern, that it to be credited. Nominal account, debit all the expenses. And I told that nominal account is expenses, whatever may be, rent, salary, tax, whatever may be, and without having any qualifying narration. Debit all the expenses and losses, and credit all the incomes and gain. Whatever expenses are there. Now if you see the A and B together and compare with the C, what you are debiting in A and B, what is coming in, that is what you are receiving. Here it is the opposite. What you are sending out, what you are expending, and credit all the incomes and gains. अब मान लीजिए कि आपने किसी से लोन लिया, you have taken some borrowing from Mr. X. You have to pay it. So once you are paying him, you are just reducing the borrowing. So debit his account. Now Mr. आरन सिंह को हमने मिस्टर ए में हमने उनको क्रेडिट किया था, क्रेडिट द गिवर आरन सिंह ने दिया था. So I have credited his account. Now I am paying him. So his account to be debited. So once both sides debit and credit are equal, cross it, close it. This account is closed. Note down. If you are closing this account in the same financial year, it means it is known as the square up transaction. Square up transactions you may come across somewhere in interview or in examination. That what do you understand by square up transactions in the accountancy? The square up transaction is nothing but the completion of transaction within that financial year without going to balance sheet. It will not go in the balance sheet. It will not go in the final books of account. However, it will be duly shown in the audit report, either internal audit or external audit. It will be duly shown in the audit report that what are the transactions squared up during the year. Now you again come back to the normal account. Normal account, credit all the income and gains. Now you see if A debit the receiver, there you have debited the receiver. Now you have credit all the incomes. So once you have taken from me in column A, now you are paying it. Once you have taken it, it should be credited. So without having ample examples, you may not understand it right now, but you try to note down that how to correlate these three accounts with these three debit and credit rules. If you have gone through it, now if you are comfortable, I will give you some examples that what are the aspects of treating the transaction to be brought forward in the financial statement. So far, any doubt, please let me know, because I am not able to see your chat box because once I am presenting, I am blind from this side. And so you let me know if you're any doubt at this end. From here, your basic concepts is over. Any doubt so far, please let me know, so that after these points, we should not have any issues on these points. Are you getting me?
Yes, sir.
So should I go further?
Sir, can you please explain the cash flow statement?
Come again.
Cash flow statement.
Please repeat your query.
So can you
Cash
please
flow
explain-
states. That is, once you come across the balance sheet, once you are fully gone through the balance sheet, then only cash flow comes. If I take cash flow here itself, then you will not understand any ABC of the cash flow statements, because before that we have to understand the transaction money flow. So just wait till balance sheet is over, and after that we will come to the cash flow. Cash flow statement is not a final books of account. It is prepared for the management only to know the real health, actual health. Now you have gone to the doctor. What is your BP? 90, 130. Okay, 1930. What is your age? 50. Oh, it is within range. Okay. This word, it is within range. How the doctor has calculated? Based, he has asked your age and he has put a formula that 80, and the lower limit plus your age becomes 130, so it is a normal. Whereas we are thinking, no, it is a disease, it should be 120 only. So first we let us learn what is 80 and what is 120. Then we will come to what is the impact of 130. Just let me see the profit and loss account and balance sheet. We will come across cash flow. It is very easy. Cash flow is not a tough thing. It is a very easy topic, but you have to identify that what are the transactions available in balance sheet forms the cash flow. Not all the transactions of the balance sheet form the cash flow. So financial statements are profit and loss account. Profit and loss accounts includes trading or manufacturing account, and then balance sheet. From this profit and loss account, whatever the net effect is there, either it is loss or it is profit, we bring it to the balance sheet. And after coming to balance sheet, reaching to balance sheet, the books of accounts till profit and loss account is closed. And based on your balance sheet and notes on account, very important point is notes on accounts. Once you prepare a balance sheet, it has more than 200, 300 columns. So what we do it, every organization just compress it within 5 to 6 heads of having the similar nature. That is the classification. Why what I told there, to classify. After classifying in different category, the only classification points are put in the balance with a number, note number in right side, that note 1, 2, 3, 4, 5. And once you go to that one notes, you will find that how you have reached to this figure, that I will put it here, I will show you here. And then comes to the cash flow statements and statement of changes in equity, that is the शेयर होल्डिंग. आप देख रहे हैं बहुत सारी ब्रीफ केस कंपनियां हैं, बहुत फेक कंपनीज हैं. एक लाख रुपए का दे आर परचेजिंग शेयर इज 1 lakh and within 6 months or within 1 year they are reaching to 1 crore. How it is possible? Once we purchase a share, then it takes year together to even reach 20%, 30% hike. But there are many transactions, there are many companies. You will surprised to know that in Kolkata like city, there are many such companies on which people are blindly believe, but once they come across through scrutiny or assessment or notice, they are shocked that I have put my all earning in one share. I was not knowing that this is a fraud company or this is a fraud shareholding. So by going to the forensic accountancy, you'll come to know that how to save your money from such steps.
Sir, I have a question.
Yes, please.
Actually, I wanted to know in cash flow, a head is coming from balance sheet or profit and loss account also?
See, balance sheet only a figure which gives the health status of your organization. Balance sheet forms two types of transaction, that is the cash flow and fund flow. It shows left side the liability and right side the asset. Asset does not mean that you are in hand. Asset have two forms, fixed asset and liquid asset. That liquid asset and current asset is only your cash flow having in your hand. So you see the health, you see what is the liquid asset in your hand and what is the liability left side to the creditor or the capitals. So basic books are up to profit and loss account where your actual transaction takes place. Only the last net effect of profit and loss accounts, suppose now it is a partnership firm, net profit is 1,50,000. So now that 1,50,000 rupees is divided in the number of partners, say there are two partners, so 75,000 each are brought to their capital account of the balance sheet. That is what I said there. So that the ownership's equity, now it is a company. Now there is net profit from the balance sheet is the 2 crore rupees. The 2 crore rupees will come to the owner's equity in your balance sheet. And if they withdraw it, well and good. Otherwise, that will add to the capital and which forms and liability to the organization. So your books of account balance sheet is only as a health status test report, and your test reports based on the data collected in the profit and loss account.
Okay, sir. Thank you.
Now see the profit and loss account. Why I told that this is the main books where you can identify in one look. If you are a good manager and having a sound knowledge of finance transactions, by seeing the different heads of expenditure, you can say, sir, this expenditure to be avoided, this has to be reduced, this has to be increased, because it is not allowing me to have a sufficient cash flow. Then your senior manager can ask how you can say, sir, if you see the balance sheet in current asset, in liquid asset, we have only little amount in the banks. Then he may say you that I am not there to deposit or collect the cash in the bank. I am there to meet in the transaction. So I am increasing my capital. Well and good, sir, but your creditors are increasing. Once you say that your creditors are increasing, then he may say, okay, then I have to put more capital. Okay, let me go for raising some capital from our pockets, not from the creditors, because we have to pay the minimum 12% of interest over the creditors. So all this decision making, all this advice, all this analysis comes from the profit and loss account nature of expenses. Profit and loss account is one of the three final books of account. What are the one of the three? First is your trading and manufacturing account. Second is the profit and loss account, and third is your final balance sheet. Accounts generated by the business at the end of accounting year. It shows the gross and net profit or loss, whatever your net profit or loss is there, generated by the business in an accounting period. It's a measure of management's ability. See, what I told you very beginning, if you are a good finance manager, then you can find out the problems, weakness, or threat of your organization. See, this is the measure of management ability, how well you have managed it. आजकल today nowadays that the government is going for selling the assets. Now government to privatization, globalization. So if you think as a real manager, then the think tanks of government are very highly qualified from each level, then how government can do it like this? But we cannot complain, or we cannot say anything negative regarding the government policy, but it is a policy makers who understands very well the ability of any organization. Profit and loss account is divided into two sections. One is the trading accounts, reflects the earning from core business operation, only and business operation, core business operation. Expenditure and receipt, both are revenue nature. Both are revenue nature. They are not of the capital nature. There is the opening stock, purchases, wages. If you write wages and salaries, it becomes the nominal expenditure and go to the profit and loss account, not in the trading account. If you are writing only wages, wages means only the persons involved in the real production units. Whereas the profit and loss account summarizes all the operating and non-operating revenue and expenses in the net profit or loss. Profit and loss account में कुछ ऐसे expenses होते हैं, those were not a real expenses, but you have to show. What is the example? Example is depreciation, amortization. On all tangible asset, there is a fixed life, and they are depreciated their value every year, beginning from 5% to even 30%. This laptop computer, their depreciation is 30% every year. Means after every year they lose their value by 30%. And intangible asset, the appropriate absorption. So amortization is on intangible assets, like a depreciation on the tangible assets. So these are the losses, expenditures which are not really occurring, but of the nature of expenses. P&L account is also commonly referred to as the statement of profit and loss account. Its preparation is based on the accounting principles of revenue recognition and matching and accrual. Now I will just focus on the revenue recognition, matching and accrual. What is the revenue recognition? Revenue recognition means all the transactions are of revenue nature. What is the revenue nature? All the expenditure and income has to start in that particular year and finish in that particular year only. That should not go in the next financial year. They are our revenue nature. Salary, if you are taking salary for April to March, that year across closes, your salary account closes for that year, form 16 is generated, that is our revenue expenditure. Now comes to the matching. Matching is the debit and credit, liability and assets, income and expenditure. Both the sides should be equal. There is no question of having mismatch. If at all there is mismatch, they may have two reasons. One, that is the of your net loss or profit, and second, error of omission and commission, जो आप न चाहते हुए भी गलती से it is left somewhere, written something 95 in place of 59. You are going to write 69, you have written 96. By seeing the difference, you will understand that have you written 96 to 69 or you left at all 69s. The net profit or loss sustained by the business increases or decreases the retained earning. Whatever earning you are bringing in the balance sheet from the previous year, that are affected, that are increased or decreased by the profit or loss of the current year. If there is loss, that your earning balance will reduce, and if it is a profit, that will increase. That is the effect what profit and loss account gives to your balance sheet. Just you see a model and sample profit and loss account, Mr. XYZ Private Limited, as on 1st April 2000 AA to 31st March 2000 BB. Means here the year changes. How to get this data and what is the authenticity of this, how it is of the standard form, for this you can refer Companies Act 2013. Earlier it was Companies Act 1956, which was totally replaced with the new Companies Act 2013, Part 2 of Schedule 3. If you go there, you will find two types of profit and loss account. One is the same side is written. First you written expenditure and below that income. And another, that is another vertical. And it is of the horizontal. Left side the expenditure and right side the income. In practice, as per ICDS, as per accounting standard, as per the requirement of income tax department, GST departments, government of India requirements, it is prepared in this form. So if you see the first part, which I say to it is farming, trading or manufacturing account, see the stock opening. What was the closing stock of previous year? That will be the opening stock of this year. That must not be changed. If you found some difference in a closing stock of previous year, then you have to write same figure here, and in a note you write that how it differs. That may differ due to the change in the accounting concepts, that I will let you know that how we change it. So we should avoid to change the accounting procedures, and we should follow the same. There should be persistency in the system. Purchase, that is the fresh purchase during the year. As this purchase is during the year, means it is the revenue expenditure. Wages, you are paying during the year, it is the wages and purely for this operation. And carriage inward. Now transportation, and carriage inward is the two different things. Transportation may include all non-operative, whereas carriage inward is only and only operative nature of expenditure. What is the operative nature of expenditure? Operative nature of expenditure means the purchase of goods and transportation of this goods. Now suppose आपने देखा कि गेहूं exports बढ़ जाने से रेट बढ़ गया and government has stopped the exports. Now many trucks has taken that wheats from different point to the different borders at the export houses. Now the charges of that truck along with the toll tax or web duty charge, they all are carried inward. If it is reaching to you and if it is selling out, if it is going somewhere for you, that is the carriage outward, and that will be the general expenses. So what is purchases on that expenditure is the carriage inwards. Now that income is your sales, pure sales, and closing stock. Both the sides should match. If it is not matching, it means there is something gross profit or gross loss. Now suppose your sales and stock closing increases and purchases decreases. It means you need some different amount to be added in the purchases side to balance sheet. Now your sale is 100 and closing stock is 50. That becomes the 150. Now your purchases, wages, opening altogether is 125. Now to balance it, to make a matching concept principle applicable, you need to add 25 at the left side of your trading account. That 25 is known as the gross profit. Should be carried down. That will be carried down to the profit and loss account. Right side, if you see, by there is a gross profit brought down. So this is the gross profit brought down here. Vice versa, opposite to it, if your sales and closing stock is less than the purchases and opening stocks this side, it means you are in loss. Then that will be written right side as a gross loss carried down, and that loss will not be reflected in right side of the profit and loss account. That will appear left side as a expenses because being a loss. So you understand this transaction, whether it is a manufacturing agency organization or it is a service sector or a trading check accounts. These are the direct expenses and income. If your purchases, your expenditure is more, then you are on loss, and that loss is termed as the gross loss and posted in the expenditure column of P&L account, and vice versa. Now if you come to the P&L account, so what are the expenses? General administration salary. Now if you see, there is the wages in first part and salary second part. Here you can also write wages and salary. Once wages is clubbed with a salary, it becomes the general expenditure, non-operative expenditure, not a operative expenditure. Sales salary, जो सेल में इन्वॉल्व हैं, अदर स्टॉप्स, एडवर्टाइजिंग, रेट एंड टैक्सेस, ड्यूटी जो आप पे करते हैं स्टेट गवर्नमेंट को, सेंट्रल गवर्नमेंट को, डिफरेंट अदर देन इनकम टैक्स, दे आर रेट एंड टैक्सेस. Freight and delivery of freight. See, now once you are going to sell, necessarily either you have included the truck charges in your sale amount or excluded. Once you are making some expenditure over that on the sales, that is the freight. And depreciation. What I told you, depreciation means diluting the value of any fixed asset. What is fixed asset? Asset we will go through in the next balance sheet. What is the asset? What is the fixed asset? What is the liquid asset? Fixed asset means it has life more than 1 year. First condition, it can be touched, it can be seen, it is durable, and it is liable to be diminished by wear and tear, by use. आपने पेन ले लिया, अब पेन फिक्स्ड एसेट में आएगा कि लिक्विड एसेट में आएगा, यू थिंक इट, आई विल आस्क एट द एंड ऑफ द सेशन. आफ्टर दैट देयर इज अ बैड डेट. एनपीए आपने बहुत सुना होगा कि व्हाट इज द एनपीए, नॉन प्रोडक्टिव एसेट्स, प्रॉफिटेबल एसेट्स. That is the
Non-performing
banks.
assets, no?
Non-performance asset, non-performance asset. That is the bank. Recently, Supreme Court has given a decision in one State Bank case where our farmer having 31 paisa due, and that case went to the Supreme Court. So what Supreme Court says that you are not behind this performance assets in huge amounts, just you are traveling a small farmer having 31 paisa. So there is always probability of reaching to the NPA. What may be the reason? We should not discuss on that point. What will be the reason? We should accept that due to any reason, if I am not able to collect anything from the debtors whom I delivered the products, and after certain time we have to treat it as good as is bad debt, I am not going to get in near future. Now there must be a provision of bad debts. If you are not making any provision, then you will continue to occur in the loss. Then what is the benefit of making a provision? Because if you are making a provision, then it reduces your net income for the payment of taxes. Now you have net profit 100 rupees. Now you have made a 10 rupees provision of bad debt, 90. Now you are liable to pay the taxes on 90 rupees only. So at least you have saved 70% of the 10 rupees, because 30% tax is to be paid. So there's always the provision of bad debt. That provision is reflected in the profit and loss account also. That is the entry. That is the entry which are both shown in profit and loss account and balance sheet. That may be the multiple choice question. Provision for tax. That nothing but income tax or GST, whatever tax is there, there should be the provision. Now questions should come from many corners that once income tax is paid on the income calculated, then why there should be the provision of the tax? Provision of tax is not to minimize your profit, rather to facilitate the payment of the tax. If you are not able to pay, then you find in the balance sheet left side there is the income tax payable or tax payable, means you could not pay it. Now comes once you could not pay means what? Accrual basis, actual cash and accrual. 31st मार्च सर्विस टैक्सेस पे हो जाता है टीसीएस पर, लेकिन वह एक्रू होता है, उसको रियल कन्वर्ट होता है, रिसिप्ट होता है आफ्टर मार्च, बट एक्रूड इन द प्रीवियस फाइनेंशियल ईयर. So this term accrual, I will tell you that what is the accrual and cash payment. If you see the right side of the P&L account, you will find the gross profit, interest and dividend earned. See, now there was the income from sales and from operation, and here you are having the income from interest and dividend earned. Income from rent, gain on sale of investment. आपने investment कोई sell out किया थे, the different other income will come in the P&L account, not in the trading account, and the total is summarized as a net effect if it is the balance of income, profit, otherwise vice versa. If you are in your expenditure is more and income is less, then it is loss. Now we should think that once our expenditure is more, income is less, then how we can make more expenditure. We see that depreciation and bad debts are not real expenditure, but they have accrued as a principle of depreciation. And third is with the raising the capital, which will come from the balance sheet. If you are raising the capital, it will increase your liability, but you will meet your revenue expenditure. So this is all about your profit and loss accounts. There are multiple formats available in the part 2 of schedule 3. You can see it, but these are the heads. To understand these 4 heads: expenditure of trading, expenditure of P&L, income of trading, and income of P&L, means that actual operating income and expenditure, the resultant difference of actual operating and income expenditure is if expenditure is more than loss, if income is more than profit, that is the gross. And likewise, in P&L account, if your expenditure is more and income is less, then net loss, and vice versa, net profit. And this net profit will go to the capital account of the directors in the balance sheet. प्रॉफिट एंड लॉस अकाउंट स्टेटमेंट, अब देखिए अभी हमने आपको दिखाया कि प्रॉफिट एंड लॉस अकाउंट आपको बड़ा सिंपल उसमें हेडिंग्स दिखाई दिया कि चलो 4-6 हेडिंग है, हो जाएगा, बट दैट इज नॉट द कंप्लीट प्रॉफिट एंड लॉस अकाउंट. दैट मस्ट बी फॉलोड विद द शेड्यूल्स ऑफ स्टेटमेंट. आप स्टेटमेंट को ध्यान से देखिए एक बार. Revenue from operation, that you see that what I told there, net profit which will go to the balance sheet. चलिए बैलेंस शीट में दिखा देते हैं आपको कहाँ आता है वो चीज. कहाँ गया? चलिए बैलेंस शीट में आते हैं, देखते हैं कहीं आगे पीछे हो गया होगा स्लाइड. रेवेन्यू फ्रॉम ऑपरेशन, अदर इनकम आपने देखा कि जो नीचे से लाया गया वहां से टोटल रेवेन्यू हो गया 1 प्लस आपका टोटल रेवेन्यू हो गया. प्रॉफिट बिफोर एक्सेप्शनल एंड एक्स्ट्रा ऑर्डिनरी आइटम्स एंड टैक्सेस, that is the 3 minus 4. Now we will segregate exceptional and extraordinary items. आप इस पर बहुत ज़्यादा आज टेंशन मत लीजिए. डोंट टेक that what is this. See, this is the statement which will come across after solving a questions. Profit loss from the continuing operation and profit loss from the discontinuing operation. So my focus is on how to have profit and loss on discontinuing operation. Now there is one already shop near to you. Now outdoor is opening some mall, wholesale. Now nearby he will tell all the retailers, you please discontinue your business and I will pay this amount to you. Now they are thinking that if I don't discontinue, then all the customers will go to mall and they will give certain discounts and we will not be able to meet our even expenses, forget about the profit. So at least we should accept this offer. And if they don't expect this offer, then the outdoor owner may think that if they continue to sell the on retail and they reduce the price below my price, then my all the capital expenses go in vain. So both are in dilemma that what we should do. And after thorough study of the situation, analyzing their future course of continuation, they reaches out of both, they reaches on some resultant that we must discontinue this operation. If you are getting profit, you endorse here, and if that mall itself is going now, they want to discontinue their capital loss, they will enter here the loss. This is how you go for the discontinuing operations. Expenditure, cost of material, that is the operative. Purchase of stock in trade. You have brought some materials. Now you see the paddy. You have taken the paddy from the farmers. Now you want to make a rice. Now how many paddies are lying there? They are not converted in the finished goods. So it should be kept as a stock in trade. Now car, showrooms. Now you are having a car. You are doing some business. That car is not a stock in trade. That car is not a finished goods. That car itself as a your liability that you are using it. But once you are doing the business of selling a car or showroom, that becomes your stock in trade. So what is the change in the inventory? Now let us see what is the inventory. Inventory means all the items, all the products in the form of raw or finished, including the stock in trade, available for the sale is the inventory. Now, how to evaluate your inventory? There are two methods to evaluate the inventory. One is FIFO, F5F4. Another is LIFO, last in, first out. If you see, there are two alternative methods, LILO and FILO, but you go through only this FIFO, first in, first out. Whatever items you have purchased first, you sell first. Whatever the items you have purchased last, sell in the last. FIFO, LIFO, लास्ट इन फर्स्ट आउट. जो आइटम आज परचेज किया उसको पहले बेच दोगे, या जो आइटम पहले से परचेज किया हुआ है उसको पहले बेच दोगे. तो हाउ टू डिसाइड कि वी शुड गो फॉर FIFO और LIFO, फर्स्ट इन फर्स्ट आउट और लास्ट इन फर्स्ट आउट. What we see, if as a manager, now there are variety of cars are coming. Now daily new model is coming. Every month new model is being launched. In a newspaper on the big pages, this is being launched. Now this vehicle is replaced. This will take the place of this. Now you have taken 100 cars in your stock in trade. Suddenly after 2 months, now new car is launched. Now what you will do? If you don't purchase the new car for your stock, then customer is not there, but now they will run behind the new. And if you purchase the new car, then old cars are lying ideally in your stock. Then how to deal this situation? For this purpose only, you have to evaluate your assets, that whether they are moving continue or not. Have you followed first in first out from the beginning or not? If not, then it is very dangerous, it is very risky to change over in between. So FIFO methods is adopted where there is not a large investment in a unit product. Unit product means particularly a car, now 20 lakh, 10 lakh, 30 lakhs. Now if you see the onion, tomato, 20 rupees kg, 10 rupees kg. So there are cold houses where onions are diminishing products are changing the cold chain system, they are kept there. So FIFO, first in first out, last in last out, you have understand, last in first out, last in last out, first in first out, first in last out. But what you should do as a manager, that depends upon the current situation of the time. You can change it, but not very frequently and not at all in the same financial year. Now, depreciation and amortization. What I said, depreciation means every fixed assets have a fixed life. There are two methods of depreciation, straight line methods and weighted methods. WDM. What is the WDM methods? Every year certain percentage of the depreciation is fixed. 10%. Okay. Now it is 100 rupees this year. Next year it will become 90 rupees. So in balance sheet, right side, you will claim depreciation 10 rupees, so balance of fixed asset 90 rupees. Left side of P&L account, you will write depreciation 10 rupees. Now next year it is 90 rupees, so now again 10% 9 rupees. It means in this WDM methods, value is never reached to the zero. Always there is a leftover life, survival life. And actually, the Government of India or Income Tax Act gives the provision of WDV only, not the straight line method. What is the straight line methods? Straight line method means fixed amount. Okay, this is the 100 rupees. In 10 years, 10 rupees will be depreciated. So after 10 years, it will have zero value. It will have zero value. It will not have any scrap value. So that is the what the depreciation. And amortization means transferring of goodwill, copyright, whatever. Come again. Please come again. Hello. Any query from your side?
Sir,
Are you
is
hearing
there,
me?
hello?
Yes, please.
Sir, can it possible by solving a problem? It will be more understandable.
Yes, it is possible.
Yes.
But at least you think that it will take 30 minutes. It is there. I have made it, but I want that after completion of at least 2 blocks, I should come with the 2 questions so that we can show it. I will. There is no provision. I try to make a provision that at least once I write on blackboard, you can see it. But you see that I have to log in on the 2 different systems, which I tried in the beginning. So if I put a PPT on a solved question, then it is possible by tomorrow once it is there. But now I think time is more today. So I let me finish it today, and that you will understand only by solving a numerical question on this that I will put before you tomorrow.
Okay, thank you, sir.
Balance sheet. As the name suggests, is the summary of the balances of the various assets, liability, and capital accounts of a business entity as on a particular date. In simple terms, it is the summary of things owned by the entity as well as the claims. It contains information about both the resources and obligations. Obligations means आपको क्या दूसरों के लिए करना है, जिसकी वजह से आपको रिसोर्स मिलेगा. Thus, it depicts the financial position of a business at a given point of time, which is usually the close of an accounting period. As of now, that is the 31st March of every year. It also depicts net worth, which is just one part of the balance sheet, which is also the total shareholders fund. Shareholders funds जो आपके पास available है, your business runs over it, and you are seeing that National Stock Exchange, Bombay Stock Exchange या Stock Exchange का fluctuation, it is uncertain. It is the game of chance. So it depends upon that also. The balance sheet depicts financial position as on a particular date. What are the data available in the balance sheet? Third point, just go through third point. To be able to read and analyze a balance sheet, you must understand its different elements. What are the different elements? The heads. And what are the heads that I will let you know. I will go fast. A balance sheet represents the assets, liabilities, and capital of the balance in such a way that the accounting equation always balances. But the accounting equation, the asset must be equal to the liability and owner's equity. That is the profit of owners. Detailed notes on balance sheet of the company. Assets are the resource, equity and liability. Of equity and liability, this is your liability. Liability will continue. Shareholders funds, you have to pay it. Once you have to pay it, it is your obligation, it becomes your liability. Share capital, once capital it is there, it is the liability, either it is yours or the shareholders, either you are equity shareholders or preferential shareholders. There are two types of shareholders, which I think some other counselor may take. If it is in my syllabus, I will take it. What is the equity shareholders, what the preferential shareholders. If I go now itself, then I will lag in our syllabus. Reserves and surplus. Reserve and surplus may be capital or revenue. Revenue reserves have to be exhausted during the year, whereas the capital surplus is carried forward and accumulated from year to year. Money received against the share warrants, that is guaranteed shares. Okay, you give me, I will, once I will come with the shares, I will give it to you. Share application money pending allotment, that is the liability you have to pay. Once you allot it, it is converted in the shareholders fund number 1, so it is removed from this. Until unless you allot it, you have to pay it. Non-current liabilities. What are the non-current liabilities? Long-term borrowing. Long-term borrowing means more than 1 year. Deferred tax liabilities. What I say that payable, all the payable which is reflected in the balance sheet left side is the deferred tax liability. Other long-term liability. Now there are suspicious transactions, that I will tell you that how to identify the suspicious transactions in any balance sheet. If I cover it today, then we may not complete the today. So other long-term liabilities and long-term provisions. What is the provision? That is the capital reserve provisions. Current liabilities are short-term borrowing, means within the year. Trade payables within the year. Other current liability, short-term provisions, and total of it forms the liabilities. Assets, non-current assets. Non-current asset, that is a fixed asset. What are the fixed asset? Tangible asset, intangible asset. What are the intangible asset? Intangible asset means that cannot be seen, that cannot be touched, but it increases the value of your assets. Goodwill, copyright, etc., loyalty, etc., these are the intangible assets. Capital work in progress. If you are a manufacturing agency, manufacturing units, then you have a stock in trade, that is known as the work in progress. Intangible asset under development, that may be non-current investment, has to be deferred tax assets, long-term loans and advances. Whatever you have seen in liability, that everything is available in intangible assets. Current assets are current investments. Inventories, that is your stock. ट्रेड रिसीवेबल, आपने जो सेल किया है डेटर से, आपको मिलने वाले हैं जो डेटर से, व्हाट यू आर अबाउट टू गेट इट. If you are not receiving it, then what will be the treatment in your balance sheet? I will tell it. Cash and cash equivalents, that is a very most important points. Cash statement जब हम पढ़ेंगे तो cash and cash equivalent पढ़ेंगे, and short term loans and advances and other current assets. ये आपका जो है करंट असेट्स है, एंड दिस ओनली फॉर्म्स द कैश फ्लो स्टेटमेंट. करंट असेट्स एंड करंट liability, the difference of this is known as the working capital. Working capital, there are two types of capital. One gross capital and another is the working capital, also known as the net capital. So what is the working capital? Working capital is the difference of current assets over current liability. Notes and account. What I told that once I told you that these are the books of account to be maintained, and the last point, fifth point, was the notes. So these are to be covered in note also. You give them the note number A, B, C, D, or 1, 2, 3, 4, what may be, but write a detailed note, because share capital, now there are lakhs of shareholders. Some are equity shareholders, some are preferential shareholders. How you can accommodate in the balance sheet? Not possible. So you write the share capital this much, note A, annexure A. Now annexure you can equity shareholder this much, on previous year this, and current year this, preferential share this, current year this, and previous year this. Likewise, long-term borrowing, long-term provisions, short-term provisions, short-term liability, tangible and intangible. These are the notes of account, non-current investment, whatever may be. Inventories, आपको मैंने बताया कि what are the inventories? Raw materials, work in progress, stores and spares, finished goods, loose tools, stock and trade, goods in transit, or other whatever may be, they are the inventories. Now this is the cash and cash equivalent. Now it is 8 p.m. I am ready to continue. It may take another 15 to 20 minutes. If you are available or willing, otherwise we may carry forward tomorrow. What is your suggestion? Please let me know. I want to hear from you whether to finish it today or take it tomorrow. I think only 3 PPTs are left in this current session.
So better it's tomorrow.
Okay, so I think this is the majority that now cash flow to be taken tomorrow.
Yes, sir.
So
Uh,
my
I would also request all the learners to please go through the study material before attending the class so that you can ask your queries here. And it's not, someone was asking that you can show any questions or, through any examples. So I don't think it's that much possible through in academic counseling. It's we are providing you in a form of presentation or trying to present it, but in IGNOU, the academic counseling mean we have to go through our study material and come here for discussions, and you can discuss wherever you find some doubt or something like that. But here we have requested our academic counselors to present the important aspects, important points. So I request you all, please go through the study material before coming for the academic counseling. And I request Dr. Ravindra Singh also to provide you the topics, the units you have to go through before attending the academic counseling tomorrow.
for tomorrow. Yes, ma'am. I will that block 2 tomorrow. I will complete block 2, that the cost and cost accountancy, which is very much important. Today's total gross receipts and gross resultant was only to analyze the balance sheet, and tomorrow there is the cost and cost accountancy. There are certain financial ratios, how to check up the health of the finance status of any organization, and tomorrow that is already covered in the your block 2. So tomorrow entire block 2 I will cover either cost and cost accountancy, and day after tomorrow block 3, 4, 5 will be over. Block 3, 4 will be there, and then 5. As someone asking some question for a session, madam, with your due permission, I will try to put a small question for the purpose of only balance sheet and profit and loss account, just for the relevancy purpose. This is the effect, not to explain, not to take much time. I think it will take 5 to 10 minutes. Because if they understood very well balance sheet, I don't think I will face they will face any problem further.
Okay, sir, you can.
Okay, then with the due permission, today we are closing the session. Thanks for your patience and hearing me. And tomorrow again we will be here 6:30, and we will try to complete block 2 and balance material of today. Thank you, ma'am. Thank you, participants.
Okay, sir. Thank you.
Thank you very much, sir.
Thank you, sir.
And someone is asking for grievance redressal session, so I'll soon plan it. Right now I'm on sick leave, so I'll soon plan it and let you know.
Yes, ma'am. If I get the what are the grievances, what are the issues, then I can answer them through
Sir,
mail or through chat or
sir, actually, it's regarding some other issue which is not related to your
okay,
academic
yes.
counseling.
Okay, madam. Thank you, thank you, thank you.
So, thank you very much for the detailed presentation, Dr. Ravindra Singh, sir. And thank you, learners, for attending actively. So, I request all of you to go through the SLM before coming for academic counseling tomorrow.
Thanks, ma'am. Thanks, ma'am.
Thank you.
Have a nice day.
Thank you,
Thank
sir.
you.
Thank you, sir. Good night.
Thank you, thank you, thank you to all. Thanks to all.